Good morning, everybody.
Good morning.
How is everybody? Good. Hey, Dennis, how are you?
Great. Starting off the week well.
Oh, that's what I like to hear. Good morning, Leslie. How are you? You're on mute. So if you're talking, I can't hear you.
I'm not fast enough with my fingers. Good morning.
Uh, yeah, I'm like, I see your mouth moving, but I couldn't hear nothing. So I'm like, "Hmm." It happens. Hey, Trevor. He's on mute too.
You're gonna make me find the mute button? Good morning.
Yes, good morning. We're just waiting for everybody to hop on.
Morning, everyone. I've got some note takers.
Morning, good morning.
Morning. Happy Monday. And I am happy for some of you guys and sad for some of you guys after yesterday. I quit. I went back to work after the halftime. I was like, screw it. So, oh. My parents, they live in Kansas City. And I'm getting some earfuls since last night. So it was a painful, emotional support that I had to give. All right. Let's get a couple of more minutes, then we can kick it off.
The golden boy got his.
Yeah. Brenda is like, yep.
They should have gave the MVP to that defensive line. Those guys created havoc all night.
All that, yep. And so my son is whoever scores more, he sides to that team. And it was interesting how you were going back. He's like, oh man, it was fun yesterday.
Yeah, I thought the most impressive part was how the Eagles won in an unconventional way. It wasn't the way that people expected them to, right?
100%. It was a good game overall. I enjoyed it.
The refs finally didn't favor the Kansas City Chiefs.
Ref was the hot topic, right?
They were under the microscope, so they had to play fair.
Look, if you think about it though, it's I feel like we gotta beat somebody else down, right? Poor refs. Every single thing is being analyzed to a point. I mean, put AI in there next time.
It's an
Finishing as a ref.
ungrateful job, that's for sure.
Yeah. But what I do miss though, I feel like even 5, 6 years ago, the refs, they had characters. They would do some of the things. I feel like those refs having characters kind of going away over time. They become too linear.
Yeah, they're
Anyways.
homogenizing everything. Everything's homogenized now, right? It's
That's
touch
right.
football.
That's right.
Those first two calls in the game, one on both sides, were like, let them play football, and they let them play after that.
Yeah. All right, let me kick it off. I will share my screen, go from there. So if someone has a background, if you go on mute, would appreciate it. And I'm sharing my screen. Please let me know when you all can see it. Cool. You all can see my screen, right? Yes. Okay. So thank you, everybody. It's 9:04. Let's get started. So this is a full disclaimer, and we're kind of talking about it. This is our insider circle and massive masters call, and sometime we'll invite a handful of people to come in who we think into work. Usually those are larger pref check writers or operational and/or long-term strategic partners. Beyond that, this is here. One of the reasons it's inside a circle and only for the massive master, that's because sometimes we'll look at deals that other people may be looking at it as well. So we'd run this call based on the honor code. That means if you're competing, let's go talk about it and we'll figure that out. It happened maybe one time, so it's not a whole lot of the time it happens. Okay. Market update. So a couple of news that I've seen that's kind of going around and I'm going to share with you. First thing first, it's our market rate forecast. As you can see, there is a Fed call coming up next month, and then there's a break that may again. Market is pricing in no change on the interest rate. Then one cut, hopefully end of this year or sometime Q2, Q3, Q4 around. So market as of now priced in one additional rate cut, no additional rate cuts after that. Again, that's so far it has been right, but let's take the assumption that one rate cut for massive side is higher for longer since last year, and that's been the case so far. So when we underwrite, you want to underwrite, with whatever debt code that we get today, it is unlikely it's going to change from now till the closing date. So that means only leverage that we have is negotiate with the lender to squeeze out some of those points or percentage of the points from there. That's the interest rate. But as you know, the rate is a directional cut. Then we have the treasury. And I'll talk a little bit on the treasury, then I'll tie it up. So what happens is, even though there's a rate cut, there's also a rate for the treasury. Most of our debt are tied up to the treasury price. So as you can see, this line, the reddish, that had a cut. So on your y-axis here, that's your percentage of the rate. It went up, then it went down. So the Feds are cutting the rate because of the inflation as you go. On the flip side, the 10-year treasury is going up, or it went up a little bit more. So whenever we're here, we did some refi conversation. It looked really, really great. Now we're getting into the debt. Our debt code is coming up higher than even 3 months ago. That because the 10-year treasuries went up. 10-year treasury is up because we're expecting a risk in the market, or there is a risk that's waiting for us that we have to go mitigate. The risk is that the recession, inflation, type of risk, which is this, the job market and the cuts. So there's a risk that we're baking in that we're gonna go through next 6 to 8 months or so. So our expectation is when you get to the Q3, Q4, our treasury should be coming up lower as we go, but for the next 6 months or so, treasury is high. So most of our debt codes are coming up more than 3 months ago. Even though the rate went down, the Fed rate went down, the treasury rate went up. On that note, one of the chatter was 3 or 4 months ago, Trump is going after the Feds, no change in the interest rate. But for us, from the finance folks, that's the way it's supposed to be. Fed's got to do what Fed's got to do. President's got to do what the president's got to do. If we allow the politics to influence the Fed, we're in a world of pain. That kind of breaks the independence of the Feds with the president. So even though on the news we're going to see a lot more hawkish conversation, but on the backside, purely from the finance perspective, the system must be independent. They must not be influenced by the others, and that's where it's supposed to be. And that way, you are in a good spot as a consumer. So for us, we don't expect any change from that side of it. But we can expect to kind of go through. Now, what we do expect, though, this correction has to happen quick. Or we hope this correction happens quick. So whatever Trump needs to do, if he can push them through quicker, then we're out of the zone quicker. So he has the speed control, not the rate control, and we'll see how that plays out. So my ask is that as you look at all the news on the finance side, put the finance hat on it, keep them separate, let them run it as you go through. Okay, I thought I'll bring that out. It was an interesting conversation last time when we were hanging out, what the president can do versus Feds can do. Okay. Beyond that, we haven't had any larger conversation. And so we follow some of those other indices as you go through. So what we're seeing, the lumber price went up a little bit more, metal price went up a little bit more. So that's where we at. And also from the home construction perspective, it is interesting that I was talking to my guy who pours concrete and it cuts trees for me. We have a job coming up. He goes, Shariar, I want to pour concrete, and the roofer shows up with only 2 people. and the whole crew is missing. That is real. It's gonna go through now for a little bit, especially in Texas. You'll see some of the news in Houston, in Corpus Christi, in San Antonio. So that's a turmoil that we're gonna go through soon, and that's why our hope is that whatever that we have to do, let's just get that thing done, good, better, ugly, so we are over it, right? So that's why we're seeing a little bit more on the foot, boots on the ground. We have 7 duplexes going on right now in Houston area. Similar thing, you can see the population have shrunk. The amount of people who's to come to do the work, and they have reduced quite a bit. Again, going back, just it's not a indication of the long-term play. It's just the short-term, and system will correct. We're gonna adjust and optimize as we kind of go through. So whatever that we're in a weird bubble for 3, 4, 5 months or so. Our hope is that after a quarter, we're gonna go through those risks, and the treasury will be start coming down. Let me go back to market. So that's all for the current debt market perspective. We haven't seen anything major after that. So planning for, I lost my access here, so I'm gonna go through and read access. Planning for 2025. What we do understand, the equity, the debts are available quite a bit. If you get the right balance sheets, we'll find that. One of the best part of this is a capitalist society and a capitalist economy. We have to deploy capital, and money will find a way to go somewhere. So on that note, the debt are quite available depending on your balance sheet. Equity, smart equity, which is the larger checks, are available as well, but the projects aren't panning out. The transaction side, it's a little bit weird at this point. I can share, you guys can see that as we have it here. Our deal flow have reduced. The brand new deal flow that have reduced. We're seeing a lot more repeat deals coming up. I'll show that to you. You guys have access to that one as well, right here. So on the total leads reviewed per quarter, and you'll see there is a drop in the Q1. That's mostly, we believe, is that good chunk of projects already came through the market, and they already got a feedback from the market, and now they are coming back again. So the first flow versus coming back, there's a reduction, hence we're gonna see going back. But the deals that's gonna come back in the Q2 and the Q3, they are very close to transaction as you go through. Okay, so that's the beauty of it. Okay, so going back, and then for us, you'll see pushing a little bit more, making sure that if you are taking a position on equity raising or asset management, you have to have both arms running. That means everyone who wants to be an asset manager wants to lead from the front. By definition, I believe, or by design, at least in 2025, you'll be raising money. So you can sit on the both side of it. For that, you got to make sure that your process and system and all those things kind of are ready to go. And to add to that, we always say you raise money in between the deals, not when the deal comes, at least to kind of test things out. So Mike's separation, where all those team calls that we have, and you'll see that standing call that we'll talk about here, it's going to get more important. Or we'll not you go over there and make sure you do a system check as you kind of do the other stuff as you go, right? We started pushing that, the deal side, the buy box to all the teams now. And most of our teams, most of our conversation when we start, it's going to be, what is your buy box? And what deals are you taking, looking at it? And do we have the LOI sent out? And once you send the LOI, is your team ready to buy that property once the LOI comes back? And that LOI, does it match with the buy box? And we'll take the team through the optimization of it. Some of you guys are on the tail end of it. Some of you guys are at the beginning of it. Absolutely no worries. But the goal is we get the team, get the buy box, run a couple of iterations, and get you guys closer to the LOI and identify gaps. And then once the gaps are identified, we keep running the LOI and the gap mitigation to a point the team is ready when an LOI comes back, right? So that the whole sponsor team responsibilities, roles and responsibilities, that is the secondary buy box for all the teams that you have, right? So on that note, last couple of weeks, we did some testing where we are proactively reaching out to the brokers and asking for deals to come out beyond whatever shows up into the Monday systematically. So we tested that out with 2 or 3 groups last week, and interestingly enough, there are some deals that's not in our pipeline that they have it. Once you go start poking, the deals come back. Why I say that? For some of you guys are ready. You guys are good at what you do. You got underwriting, you got that under your belt. And now sometime we wait on what's on Monday. So you're gonna see us pushing a little bit more over, say, hey, take the sample of last 5 brokers deal that we have underwritten. You make the phone call to those 5 brokers instead of asking them for the deals, what they have not listed on the website and things like that. So you'll see that coming through more this week. That's not for all the teams. That's for some of the teams that have been with us for almost 3-4 months or so, and they have checked out the boxes. They understand, underwriting. They have done quite a bit. Team is working out, and the team's responsibilities and roles and responsibilities check out. They practice enough, and they're almost self-sufficient. So we're going to push up to that notch of it. So that's the optimal goal, where a team gets self-sufficient, independent. You guys are doing the deals, and if you need something, tap us in. I would say Jessica last week, she did a good job. She talked to a broker. Broker was tough. We called. Broker came us and gave us a deal. Broker was trying to play hardball. Luke jumped in. He did absolutely the right thing, and it was a fun exercise, right? That's there. From our side, we have a couple of activities. So investor relations and AI. We're waiting for some technical things. Sometime this week, next week, we'll release that. We also made some changes within our team. As some of you guys may have heard, we are onboarding officially. We're onboarding our marketing manager, new marketing manager, Ivantia. She's from Brazil. She's been working with us for 2 months on the back end. She'll be coming on board full time starting end of this month. At the same time, we wanted to beef up our asset management team, our finance team. We have interviewed, quite a bit of people. We found a gentleman from Pakistan. He's going to come in as a senior manager. He currently works for CBRE as an asset manager, looking at some of the assets in Dubai. So we're going to bring him in. His offer went out. He accepted it. His onboarding is going to kick in. So he's going to work in the back end for about a couple of months or so. Then he's going to come back out alongside with David to support the finance and operations as you go. Okay, Pro Money. Please, if you don't have your system set up, going back to capital raising, go out and sit down with the Pro Money team and let them solve it for you. That's one of the best things you can do, even though you don't need the money today, you're not raising it today. But if you think to build your portfolio, Pro Money will be important for you. So every other Thursday and weekly on a Saturday. So weekly Saturdays, if you don't have it for the first time, go understand what they can or cannot do, then you can optimize as you go. And once you have it, then every other Thursday you can go back with the question how to fine tune it. Tuesday and Thursdays, and that's our active deal calls. Mike runs that call with Trevor and and Jasmine. So we'll be running the calls there. So as the deal comes alive, and we'll go bring it in. Those are mostly massive. But if there's nothing else, I mean, we're gonna optimize. So if you are scheduled on the call, please attend. It's a good call to attend and understand how the pitch look like. And also capital raising call, we don't have anything yet, so we're gonna go from there. Okay, new construction and the civil call, that is almost ready. We're trying to finalize the sequence of it. Again, once a month, probably as of now, we'll have one architect and a civil engineering company come out and look at all the land deals that we have. Before we brought them in, or before we bring them in, we thought we'll do some testing. So the conversation is going well so far. We have one team in DFW area. We have another team that we're building a relationship in San Antonio, Austin area. And we have an existing team already in the Houston area. Initially, we thought we'll bring in 1 or 2 teams that covers the state of Texas. Then some of our most recent realization is it is what we call it the strategy in China for China. That means you need a local person who has done deals locally, especially on the technical side, civil side, who can give us the local answers. We kind of fragmented out DFW, Austin, San Antonio, and Houston, and that's how we're gonna look at it from the civil side. Architect, the more or less goes across the state line. That is not there, so we finished that. On that note, Michael Blanks, he has his seminar coming up or his event coming up next month. I'll be speaking about risk. It was interesting. They were looking for a speaker. We dropped a note, so they gave us 45 minutes to talk about market risk and mitigation. So I'll be having that next month, I believe. Equity raising activity. Sorry, I'm going through quick today. Mike is out. He is doing some house moving today. So from the equity raising, we have decent amount of activity. I can give an update. Let me see where I'm at. So Candela, it's officially closed. We are wrapping up the technical points. The family office and us will go back and forth to settle on the relationship type. There are about 2 or 3 mute points, not mute points. Decently, 2 or 3 points we're negotiating to settle on it. That's where we at. Horizon, so fund of fund is already done. It's a usual syndication. If you want to practice, that's a good deal to practice. And we slowed down a little bit to fix the operation a little bit, and we come back out again, hopefully next month or so. We'll go finish the raise there. Save Stewart, it is, we have, again, I met with the seller last 2 weeks ago. So seller wanted to change some of the terms, so we are going back and forth. I think it's gonna change a little bit, but we're gonna need about $1.5 million, or $1 to $1.5 million of first tranche, and then another $1 million on the second tranche. But either way, we'll know about that deal within the next couple of weeks or so. I have an action to drop a note to seller and trying to finalize, so I'm actively working on that one. New construction pipeline, we have Georgetown. That's quite a bit of project. This is very similar to New Brunswick project that we're doing. I think we're up to 120,000 square foot. We are waiting on, right now, we are working to get a site plan developed. We interviewed the brokerage company who can do lease up and or listing. And we are finalizing the civil guy and a timeline. So directionally, what I understand, if all things goes absolutely perfect, we'll break ground in month number 10. So May, October, November timeline will break ground. So it's gonna escalate quick after 2 weeks or so. Fate, same thing. We walk the property. We are sizing what kind of a product to bring in. So we are going through the exercise of it as you go. LOI outstanding. We have 2 deals that we have LOIs and outstanding. One is Chirayu. He's working on a deal. I think the PSA, we're in the last stage of that. Chirayu, you want to give us a quick update on that one before I go to next?
Just took me a second to come off mute. Yeah, so this one is Vale Apartments PSA. At least both the attorneys have agreed to all the clauses. It will take just one day today to get the seller's nod. Once that is done, PSA will be signed and we'll go through the next steps.
Awesome.
CFO date for the second one, Harvest Moon, is this Friday. It works pretty well for us at a certain number. So we will put an LOI together and tease that in the hope that that gets to the next level. Thanks, Shred.
Thank you, Joe. So the Vale, it's one relationship, and the Harvest Moon, another relationship.
Yeah.
We worked with the brokers quite a bit. I saw one of the brokers, NMHC. So without doing the underwriting completely or due diligence, we had a pseudo handshake on a number. So we'll see where we kind of go out to be. So those are the 2. Then Rudy has another one. I know Rudy, are you here? Okay, Rudy's not, I don't see him. So I know this seller, he came, he was a contact that we reached out when we started talking about a couple of years ago from our land acquisition team. And we ended up becoming a good friend. He does smaller retail center development. He built a business park, and he has a restaurant and 100 acres or so. So we met him a whole bunch of time. He has a building he's been trying to sell for a long time. finally, I think we are like really, really close to shake hands on the price. So it's a Class A, 2-story retail building in Montgomery County, close to Grand Parkway. Rudy is leading that. So folks who are looking at triple net, drop a note to Rudy. So he's looking for a team. I think the buy price is around 3.2 million. Total equity is about $1 million, but it's a JV deal. So I'll drop a note in our chat as well. So you have 3 deals potentially looking at it. 1 PSA about to be finalized. Behind that, we don't have a LOI or PSA signed yet, but we are very close to the strike price. Behind that, we have another apartment. So we have 3 deals that we're actively looking at from our Astros platform as we go. Outside of it, we have quite a bit of last night. Someone sent me a couple of retail deals. We have a land development deal. We're very close to it. So a whole bunch of things are working. And if I look at that workflow going back to the capital raising and asset management to make sure you have your systems in place and you're practicing as you go. I'm just sharing those names. So apartments, we got 2 that you're second looking at it. Triple net Class A asset is Rudy. He's second looking at it. We have a new construction. Alex is looking at it. And we have a whole bunch of other deals as we go. Yeah. All right. Now, I went rather quick. I guess this is, me talking mostly. And let me go back to our lead tracker. Yes. So from the RV park, and we have a couple of RV parks that LOI went out. John and Sharon looking at it, and so we'll see where we at. And that's in the Bastrop area, and then a storage. I don't know where's that at, but then we also have the Urban Air. I know, John, you here? I think
Yes, sir.
LOI came back. Yes. Any update on that one?
They rejected the first LOI, so we resubmitted. We haven't heard back for the second one.
Awesome, cool. And I believe the Black Gold RV Park, we took a look at it last week, and it's going to continue as you kind of go. So it's quite a bit of activity. So on the LOI and offer, flipping back, LOIs, first time LOI is to identify the gaps of intake. That means what if the LOI comes through? Can we, buy the asset right away? And then we kind of mitigate the gaps as you kind of go through. So if we're sending an LOI, ask the question that what if the LOI comes back right now and we have to go get the asset? Did I talk to my team with the roles and responsibilities to understand who's going to run the asset, who's going to bring in the equity, who's going to bring in the financing, all this other good stuff. So always keep that in the back of your mind. So we are priming you up to the LOI to get you ready to buy an asset of that size. So we're excited and lots of activities. I think we'll be doing decent amount of deals this year. So stay on top of your deals. One thing though, if a deal is good, they tend to go through fast. But also flip side, there's not that many people doing deals right now, which is emotionally and look at the number wide, they're kind of a little bit more worried. But if you think about it, if we can make a deal paying a higher treasury rate, makes sense, right? So what I would leave you with that for next 8 to 10 months, market will have less noise. If we do the right due diligence, right underwriting, right way, then we should be able to pick up some deals that we have that are available. So that's all I had. I went rather quick. So this is the first time I finished everything in 29 minutes. Any questions, comments, thoughts, anything you need from us as you go through? I'll stop sharing, go from there. Man, you're quiet today. All right, that sounds good then. So we got 30 minutes back. Really appreciate all of the work that everyone is putting in, and we're here. Looking forward to give you some good news. I think with some LOIs and contract, time to get excited. All right, thank you, everybody.
Thanks, Sharon. Thanks all.